Hello, hello, everybody. We have a brand new vlog this week on Fierce Feminine Finance, and I wanted to go over it with you guys. I've never tried this before. I thought it'd be kind of fun to go live and show you guys exactly what the blog covers and kind of go a little bit more in detail, maybe give you an opportunity to ask me questions. So if you're on live, hey Danielle, if you're on live, go ahead and use the chat as you want. Use it as liberally as you possibly desire. As I walk through what the Fed has said about interest rates for 2025. So if you guys are not familiar, the Fed refers to the Federal Reserve. And the Federal Reserve is actually a privately owned organization in the United States. A lot of people think it's a government organization, but it's not. It is a privately owned organization. And this organization's job is to monitor the economy of the United States. So where the economic policies that are set by lawmakers or executive orders from the top guy can make slow changes to our economy. The advantage that the Fed has is that it's not weighed down by having to vote for things or etc. And so the changes that the Fed makes can be quick, and it's meant to do things that will help protect our economy. Now, whether the Fed actually does a good job of that or not is a topic for another day, but one of the things that the Fed controls in the United States is the interest rate. And why is that important? Well, because when interest rates are high, that slows our economy down. So you notice sometimes like, whoa, we're getting into a recession. Whoa, things start to get a little slow around here. That was done intentionally by the Fed to slow down the rate of the economy, because when we slow the rate of the economy, the concept is we can then slow down the rate of inflation. So you guys have probably noticed, right? What happened? Well, during COVID, we went and like paid out a bunch of money to everybody, right? And that sped up the economy, which was good at the time because people were being laid off and stuck at home and unable to, earn money. But unfortunately, what that did is it sped up the inflation rate as well. Now, there's a lot of different factors for that. I would say a majority of the inflation hikes we've seen in the last few years are really just big corporations profiteering off of everybody else. That's the unfortunate part, okay? But the fortunate part is that it sped up our economy at a time when we needed it. So we weren't like countries like Sierra Leone, where people were out in the streets starving, right? So like that was the purpose of the Fed, and the Fed did a decent job of actually accomplishing that. They sped up our economy. And then if you remember, was it last year or the year before, they started to raise interest rates higher and higher and higher and higher. Why were they doing that? They were doing that to try to slow the economy down again. So it's a little bit of like checks and balances, right? They're trying to slow it down because inflation was getting too crazy and the dollar was being devalued. So that was their intention. Now, in the end of 2024, the Fed announced that they were planning to do 2 interest rate cuts in 2025. This was a good sign. This meant that inflation was slowing and that our economy was growing at the rate that they wanted it to, which would bring down interest rates. And as you guys know, interest rates coming down helps a lot of things, right? So this past week, while I was in the middle of doing my 3-day challenge, the Fed announced that they decided not to do their first interest rate cut yet. They're still saying that they think they're on track to do 2 interest rate cuts in 2025, but right now they're holding steady at the high interest rates we have. So I wrote a blog for you guys. You can feel free to jump on over to the blog if you want to and learn all about it. Let me put this in the chat. Here's the link in case you guys want to jump right to the blog and just read it yourself later. But I thought it'd be kind of fun to actually walk through this blog together here on live and talk about like what are the impacts that this has on women, particularly women who want to use our business profits to build personal wealth. So the very first thing I'm seeing is in response to the Fed making their announcement, and then of course the media goes wild and goes, oh, this economy is not slowing down, or the economy is slowing down, or it's the growth of the economy is slowing down. What do we do? Right? They're causing a fear response. So the first thing you have to know is that if you're noticing money objections, okay, if you're hearing your customers have more money objections, if you're seeing your customers buy less, if they're saying, oh yeah, I might buy, but I'm going to wait, or if you're a real estate agent, you're hearing people say like, I might, invest in a new property, but I think I'm going to wait till interest rates come down. They're hesitating to spend. It's not you, okay? It's not that your business is horrible and they don't really like you and you're not doing what they need and want. That's not the problem. That's not the problem at all, okay? It's not you, it's the headlines, okay? So what do we do? If you've had a failed launch recently or you've been hearing a lot more money objections than usual, the first thing is to not let it go to your head, okay? Get out of your headspace and just look at the facts. The facts of the matter for your business are that you need to sharpen your sales skills. Good sales skills and knowledge of how to validate your offer are the two primary things you need to be in control at a time like this. When interest rates are high and inflation is high, we have both right now, right? Which is why the Fed is keeping interest rates high, is because the inflation rate is still too high. When the inflation rate starts to come down, the Fed will lower the interest rates. But for right now, we have both. And that is going to eat into your profits unless you really start honing your sales skills now. So I really want you to focus on that. Just think, in a recession, in a depression, and the tighter the economy is, buyers need more trust and more confidence to take action. So the better you can show up for them and lean in to your expertise, the product or service that you sell, the magnetic messaging of it, the more you can lean into that, the easier it will be for you. Okay, so if you have any questions about tip number 1, put them in the chat so I can answer them. All right, I'm going to move on to tip number 2. So I already said this before, high interest plus high inflation. What does that mean for us on a financial level as business owners? If you think high interest and high inflation, I want you to think time to protect my businesses, okay? So inflation is a totally real thing. And the thing that happens with inflation as a small business owner is it starts to eat into your profits, as I already said. Expenses will go up and up and up. You'll notice that your own personal expenses go up, but also sometimes your business expenses will go up. If you have payroll, people start asking for pay raises just because of standard of living, right? Things like that can start to really eat into your profit margin. So here's what I normally see happens for entrepreneurs. Your expenses go up, right? Supplies, services, software, everything. Prices start to go up. Your clients are also being cautious. So your ability to sell goes down unless you improve your sales ability, right? So your expenses are going up, your sales are kind of coming down, and we start to see this tighten of the profit margin. And then a surprise expense hits, and what happens? You're suddenly having to put that expense on a high interest credit card. And the credit card interest is going to be even higher than usual. Why? Because those interest rates from the Fed are high. Or if you're trying to get a business loan, the rates are going to be very high. So this is where there's one thing we can do. There's one thing we can do to avoid all of this, right? Even, yes, like, okay, improve your sales skills, right? That's important too. But there's one other thing we can be doing right now that will definitely improve your ability to survive this type of situation in our economy, okay? And that is to have an emergency fund. So think about it this way. If we have an emergency fund, let's say you already have 3 months worth of expenses. Take the time now. If your business has not slowed down yet and you're going, Sarah, I'm not feeling any of this, good. Now is the time to start building your emergency fund. Build it up as big as you can get it. Keep your money liquid, okay? So that down the road, if we do not see the kind of turnaround that the Fed is saying that they're hoping for, then you will still be okay. Those unexpected expenses, that creep of inflation and the creep of people having more money objections will not hurt your business because you have something to fall back on. So that's my second tip for you, is to build up your emergency fund right now. If your emergency fund is fully funded, meaning you have 6 months worth of expenses in a savings account right now, then the other thing I would recommend is building your other types of savings. So an emergency fund is not the only kind of savings we should have. We also want to have savings to do investments, because in times like this, because inflation is going up and ability to sell is going down for many people, that also applies in the stock market. And so you start to see the stock market come down. Why? Because those companies, if you guys remember from, I know you guys don't get to see my Confident Investor Academy coaching calls, but for those of you who are inside Confident Investor Academy, you know we've talked about how companies will release their projected earnings, and then you know, at the end of a quarter, they release what their earnings were. And if they miss their projections, their stock will tend to drop. In other words, their stock will go on sale because the company missed their earnings projection, right? So this is another reason why right now is a really good time to be saving up a lot of money in cash, because you're going to want to do what we call buy the dip, right? So if you're a Confident Investor Academy member, you know I've been talking about this for 6 months. Hoard cash, save up cash, build up your savings, because the dip is coming. And look, here we are. The dip is here. The dip may continue to dip. Things may be going on sale even more than they are now, but that's why you want to be saving up cash, okay? All right, tip number 3. The other impact that the Fed's decision to keep interest rates high will mean for you is that we have to track our profits even harder than we usually do. So if you're usually kind of like, well, I know that my profit margins on average, blah, 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 and you just kind of have that fixed idea in your head of what you think your profit margin is, and it's based off of a calculation you did like 12 months ago, lean into the finance checklist, right? Our 2 weekly finance checklists, which you can find inside Plan Her Profits and also inside Confident Investor Academy. We have the Money Monday checklist and the Finance Friday checklist. And in particular, we want to lean into the Money Monday checklist, where we're using my finance tracker grid, right, to actually know how much our profit margin is. Not just guess, not just like base it on average off of something from 12 months ago. Remember, things are changing. Inflation has risen since then, and possibly you're having more money objections coming, so you might be having a slow in sales. If that's what you're experiencing, go recalculate what your profit margin is and keep consistent track of it. Now, for those of you guys who are not clients already, if you're not a Plan Her Profits member and you're not a Confident Investor Academy member, I'm actually giving away a free copy right now of that budget template and expense tracker that I just mentioned. So if you want a link to that, definitely let me know in the chat. Even if you're watching the replay, go ahead and let me know in the chat, and I will make sure that you get the link to that. All right, tip number 4. This is where there is a silver lining here. So we've talked about how, you know, credit and loans, business loans that you have to get to like cover payroll are a bad thing right now, really, really extra bad, even more than usual because of high interest rates, right? But there are some good things that happen when we've done a good job of creating a nice, sexy, fat, thick, you guys are hopefully laughing, profit margin, right? We want like thick thighs on that profit margin, right? But when we're also using those profits to build savings, build in emergency funds, build our investment accounts, there's something we can take advantage of. If we've been really good about budgeting, we've been really good about saving, we've been really good about widening our profit margin, now we can take advantage of what the Fed has done for us. So let me tell you about the gift that the Fed has given you by keeping interest rates high. So traditional savings accounts earn like next to nothing, right? If you're keeping all your money in like a regular bank savings account, you are missing a massive opportunity right now to build wealth. Now, maybe you're a Plan Her Profits member and you haven't ever started investing yet. And you're like, I'm not really sure about investing. That sounds really scary. I want you to think about how much money is working for you, right? We talked about this during the 3-day challenge last week. Does your money love you as much as you love it, right? So if you're working really, really hard to earn your money, are you then making that money work as hard for you? So a great way to get started, if you've never invested before and you're kind of feeling a little bit nervous about it, Or if you're talking about like your emergency fund, where you kind of want to keep that money very liquid, easily accessible. That's what liquidity means. Liquid means it's easily accessible. That's a finance definition, right? You might want to consider what we call a high yield savings account. PayPal has one right now that I think is about 4%. Amex has one. That's where mine is right now. I have an Amex high yield savings account, which is at 4%. There's a couple other ones out there that are more like 3.9, 3.5. Look for the one that's got the best high interest rate right now, because these are a direct relation to the fact that the Fed has interest rates high. Okay, so high yield savings account could be a great way for you to start tapping into some growth while you're saving your money. You also might want to think about things like fixed annuities. If you're looking at long-term investing or long-term savings plans for retirement, etc., an annuity is a financial product that gives you guaranteed passive income for life once you turn it on. Now that's the pro, right? The cons are you have to be a certain age to turn it on usually, but we can buy one at any age. If we lock in a year like this year where the interest rates are high, then down the road, those interest rates will continue because they are guaranteed, okay? So of course, you have to know who to go to, who knows how to structure these. If you want my team to go ahead and do that for you, comment the word annuity below, and we will make sure that you actually get access to someone who can help you with that. Another option is certificates of deposit. Again, these are usually tied to the Fed's interest rate. So another great example of, hey, when interest rates are high, there's a silver lining there. If you've done your job as a finance girl, right, of your own personal finance hack in life, of actually taking your profits and building savings. Now you're ready to take advantage of things like CDs. There's other fixed rate examples below too. I think I put a few others. Oh yeah, newly issued bonds are another great example. So bonds are basically you're lending money either to a company, or in a lot of cases, like there's US Treasury bonds are considered very conservative but very safe. US Treasury bonds are literally loaning money to the US government, right? So newly issued bonds that are being issued this year will be issued with the new interest rates that the Fed is using, right? So right now they're keeping those interest rates really high. So any bonds that have been issued while the interest rates have been high will have a better return than bonds that you might buy down the road when the Fed has brought the interest rates back down. So there are a lot of different examples. I would encourage you to read this whole blog to get more examples of ways that you can make your money work for you right now while the Fed has these interest rates high. All right, tip number 5, I kind of already mentioned this one, but it's super important. Buy the dip, right? So as I already said before, companies that are being publicly traded in the stock market some of them are missing their income projections right now because of everything that's been going on. So interest rates are high, sales are coming down because people are afraid to spend money. And that means that these companies that are actually very solid companies, right? We've done what we call our fundamental analysis of that company. We've made sure that it's a financially sound company, but they're on sale right now because of what's happening and because of the Fed's announcement. We're seeing a little bit of a dip, which all that dip means is that your favorite stock is now on sale. So this is a window of opportunity that if you've been doing it right and you've been saving your money and you've been building those funds, you might be in a good position to take advantage of that. So the other thing to maybe keep an eye out for is, okay, what do we do when the Fed finally does drop rates? And I'll probably do another blog at that time so you guys can really get informed on this subject. But once the interest rates do drop, certain financial products will no longer be as sexy, right, as they are right now when interest rates are high, but other strategies will become a better option. Like, for example, mortgages and loans for real estate, etc., will be lower once the Fed brings the rate down. So that might be a good thing, a good time to start diversifying into real estate, right? So these are the kind of things I want you guys to consider about your finances this week. If you're doing your Money Monday checklist, which you should be today, take a look at the things that I talked about in this video. If you're doing your Finance Friday checklist at the end of this week or whatever day that you do yours, again, think about how can I buy the dip right now? if you've got an extra $20, if you've got an extra $200. I know some of you ladies have an extra $2,000 right now. You're like, how can I buy the dip? Watch this video, go read the blog, and consider, how can I actually apply this to my life right now? All right, thank you so much for coming on. If you guys have any questions at all, drop them in the chat and I'll circle back around and make sure they get answered, okay? I'll talk to you all soon.